If you want an exposure to a market or an asset,
Everything they need in one place.
the world's foremost authority on
Individuals, advisors and institutions.
In the Fund Manager's Favorite series, we have heard from a number of different fund managers at a number of different fund houses, and now we're getting to hear from BlackRock. I'm joined now by Mike Prentice from BlackRock. He runs two trusts there. One is gold rated and one is silver rated, and we're going to be talking about his favorite investment ideas right now. So, Mike, thanks for coming in.
Hi, Lana.
Now, let's talk about your investment strategy more generally. Are you in it for the short term, long term, small cap, large cap? What are you going for?
Yes, we invest in small and medium-sized UK-listed companies and companies that we believe will become much larger in the medium term. And if they deliver to our expectations, we hold them for the long term.
Okay, so looking for long-term kinds of holdings.
Absolutely, and we've held some holdings for 10 years, for instance.
Okay, now let's get into your top picks. We have Victrex, AZ Electronic Materials, and Dunelm Group. So let's start with Victrex. What do they do?
They manufacture a high-performance plastic called PEEK, and the attraction of PEEK is that it's replacing metal in lots of applications. It has some very attractive characteristics which allow it, for instance, to win positions in the Boeing 787. So you find a ton of PEEK in a Boeing 787 because it's light. And so it can replace heavier metal, and it allows greater fuel efficiency. You find it in iPhones and iPads because it's hard wearing and it copes with heat well. And you can find it in spinal implants, for instance, because it does wear well.
Wow.
So lots of different applications, also in automotive, in oil and gas. In fact, the company has more than 2,000 specified applications, which generates widespread revenue for it.
So the plastics theme is what we're investing in essentially here.
Yes, yes.
Okay, moving on to the next company, AZ Electronic Materials. What do they do exactly?
They make high-purity chemicals used in the semiconductor manufacturing process. So their customers are the big semiconductor manufacturers around the world. And if you think of semiconductors, they're getting smaller and more complex, which means they have more layers, and between each layer you find chemicals, which AZ make, and they're sort of insulating materials and anti-reflective coatings, critical to making the semiconductor work effectively.
So as more companies are using semiconductors in different kinds of products, and there's a proliferation of semiconductors, you're seeing better business conditions for AZ. Is that right?
Absolutely, yes. And there are more and more requirements for semiconductors, you say, in all sorts of areas, and they're gaining market share as well.
Okay, now let's move on to Dunelm Group, a very different kind of company. This operates in the UK retail sector. I don't have much faith in this company, but it convinced me. Why should I invest here?
Well, we're very sceptical about the retail sector too, and we're very wary of companies with long leases, for instance, and the exposure that brings with it. The nice thing about Dunelm, though, is that it's had a fantastic record of success since it was founded 30 years ago. What it does is supply a whole range of homewares, from the relatively inexpensive to the quite expensive. So there's something for everybody. And they have this network of stores around the UK, which is still being rolled out. So they don't have many in the south of England, for instance.
So that could be an opportunity for
It is absolutely an opportunity. And if you look at their performance relative to many retailers, they are consistently achieving good like-for-like increases and also gross margin increases. That's meant that profits have been going up. I suppose, in a way, probably the most attractive thing for me is that they've self-funded their own growth since they founded 30 years ago.
No debt? No debt?
They have no debt. They generate a lot of cash. They're actually in the process of paying cash back to shareholders, excess cash which they don't think they're going to need, even though they're continuing to expand. So it's a very attractive story, that, for me, self-funded growth.
That is definitely a convincing argument. Okay, now let's go over the key risks for each of these companies. Let's start with Victrex. What would be the key risk here?
The key risk really is some kind of destocking by its customers. We think this did actually happen in late 2008 when you saw a number of customers destocking at the same time. We think now that control of inventory in the pipeline is much better than it was then, and the likelihood of that severe destocking, we don't think that sort of environment is around at the moment. But it remains a potential risk, but a smaller risk than was the case.
Okay, and for AZ Electronic
Much the
Materials?
same, actually, of destocking. I mean, if you think they're supplying into the semiconductor cycle, which is notoriously cyclical, you can get quieter periods when the semiconductor companies will just decide to reduce the amount of chemicals that they've got. But again, the management have got very good control, I think, of inventory in the pipeline. So I don't see that as a great risk.
Okay, for Dunelm Group, what would you say is the key risk there?
Well, they've coped so well with the difficult economic climate we've had in the UK over the last sort of 3 or 4 years. They've grown through the recession. So it's hard to imagine what would derail them at the moment. And it would have to be a very severe setback, I think, to the UK economy, which actually we don't expect.
Hopefully not, fingers crossed.
Fingers crossed, yeah.
Okay, thank you very much for coming in today.
Thank you, Alana.
That was Mike Prentice from BlackRock. I'm Alana Petroff, and thanks for watching Morningstar.